Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we're starting briefly with the Asian stocks. They tumbled on Wednesday with Japan's Nikkei entering the bear market, as of course global sentiment remains low on concerns over economic growth. In Japan, the Nikkei 225 closed 632.18 points or 3.71% lower at 16,416. By, of course, the 52-week high of 20.868 on 2015. Overnight, the International Monetary Fund cut its global growth forecast for 2016 to 3.4% from 3.6%. The organization, however, cited slower growth in emerging markets, especially in China, following commodity prices and, of course, the raising interest rates in the United States as a potential risk in global growth. Also, the People's Bank of China said late on Tuesday it would inject more than 600 billion yuan into the financial system to help ease a liquidity squeeze, which is expected to happen before the Lunar New Year holidays in early February. Before the market opened, however, the PBOC set the yuan midpoint rate at 6.5578, maintaining stability following the previous session's fix of 6.5596. In Europe, briefly, the stocks over there opened sharply lower on Wednesday, taking cues from a weaker session in Asia and, of course, fresh lows in the oil markets. London's FTSE is opening down about 2% at 58.76. Germany's DAX opens down over 2% at 94.28. While, of course, the French CAC 40 fell 2.4% at the open. The dollar index, which, of course, as we know, measures the greenback against 6 major world currencies, gained about 0.06%. The dollar also held near the flat line against the yen, as it had hit 5-month low of 116.51 yen on Friday. And, of course, the investors are still worrying about global growth prospects, a factor expected to limit the yen's losses. Sterling, however, fell to a 7-year low against the dollar, and Bank of England's Governor Mark Carney said he had to set timetable for an interest rate increase. The pound reversed earlier gains and fell about 0.75% against the dollar and fell through the trading day to 1.4130 following the Carney's remarks. The euro closed near the 1.09 area versus the dollar on Tuesday and modestly gained another 60 pips in early European trades today, aiming to retest the $1.1 level. Gold in the commodity sector also edged higher on Wednesday as a further fall in equities, and oil burnished bullion's safe haven draw, although the metal was restricted to narrow ranges. Gold was up 0.2% at 1088.66 an ounce in early Asian trade, as well as it has been well supported by a weaker appetite in riskier assets that had faced resistance at around 1090, with some investors attributing this to slower Asian physical demand. Crude futures in the energy sector slumped again in early Asian trade on Wednesday, with U.S. oil falling to its lowest since September 2003, below the $28 a barrel mark, on worries over a global supply glut. Now, what came in the Energy International Agency, which advises the industrial countries on energy policy, it warned on Tuesday that oil markets could drown in oversupply. U.S. crude futures were trading down 46 cents at $28 a barrel throughout the Asian session after dropping to 27.92 early in the session. Of course, a new low since September 2003. And the most important events today in the economic calendar is the U.S. Consumer Price Index coming out at 13:30 GMT, and at 15, Bank of Canada's monetary policy statement and interest rate decision. That's all for today. Please follow up the economic calendar. Major volatility expected today. Thank you. See you next time.